If you serve this country, you earned a benefit that most people, including a lot of loan officers, don't fully understand. And because of that, veterans are getting told no when the answer should be yes. Today, we're going to walk through what the VA home loan really looks like, how it works, and why strategy matters more than any single number on your credit report. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. I've been doing this a long time, and I can tell you without hesitation, the VA home loan is one of the most powerful wealth-building tools available to American families. The problem is most veterans never get the full picture. So today, we're going to change that. So the VA is not like other loans. Let's start with something fundamental. Most loan programs are built around one primary question. Does your debt-to-income ratio fit inside our box? That's conventional thinking. That's the FHA approach. That's what most lenders default to. The VA looks at your situation differently. Yes, they look at your debt-to-income ratio, but what the VA really leans on is something called residual income. Residual income is the money left over in your household after every single monthly obligation is paid. Your mortgage, your car payment, your credit cards, your child care expenses, all of it. What's left? That's what the VA wants to see. Why does that matter? Because a family with 2 kids living in the Midwest needs to be able to put food on the table, pay for gas, handle an unexpected car repair. The VA built in a floor, a minimum amount of discretionary income to make sure homeownership is truly sustainable for the veteran family and not just technically achievable on paper. That distinction, sustainable versus technically achievable, is exactly the difference between eligibility and suitability. And it's the difference between a loan that works and one that creates a financial hardship 3 years down the road. The guidelines are more flexible than you think. Here's a lot of where veterans get shortchanged. They walked into a lender's office, their situation is a little complicated, and the loan officer, who may not know VA guidelines the way they should, looks at the surface of the file and says, no. Let me tell you about a veteran I worked with. He had late payments on his credit report, and another lender turned him away. When we sat down and looked at his story, we found out those late payments all happened in the same month while he was traveling, traced back to an identity theft situation. He had documentation. He had a letter from his bank. He hadn't missed a payment before or since. We told the story. We documented it thoroughly, and he became a homeowner. That's what I mean when I say strategy beats rate always. The VA guideline allows for what are called extenuating circumstances. Life happens, medical situations, identity theft, deployments that disrupt household finances. The VA understands that because they built this program for people who serve, and service is not always a straight, predictable road. Now, does that mean every lender will work through those complexities with you? No. Some lenders have their own internal overlays, their own additional requirements laid on top of VA guidelines. That's legal and that's common, but it means finding the right partner matters enormously. Occupancy, active duty, and family situations. Let's talk about something that catches a lot of active duty families off guard. The occupancy rule. Most loan programs expect you to move into the home within 60 days of closing. For a conventional civilian family, that's usually fine. But the military lifestyle doesn't work that way, and the VA knows it. The VA allows up to 12 months for a veteran or active duty member to occupy the home. And here's what's even more important. A spouse or dependent child can satisfy that occupancy requirement entirely. Think about what that means for a family. Dad gets reassigned to a base 6 hours away. Mom and the kids need to stay put until the school year ends, or maybe they're moving ahead while he finishes his duty station. These are real situations that happen constantly in military families, and the VA built flexibility into the guidelines specifically for those circumstances. I've worked with an active duty recruiter who was running a recruitment station in Ohio, but his family was buying a home in Michigan, hours away. His wife satisfied occupancy and they're homeowners today. The point is, don't let complicated family situations stop the conversation before it starts. Bring the full picture to the table and find someone who knows how to work with it. Income more than just a paycheck. Now let's talk about income, because this is where I see a lot of veterans either get discouraged or get misguided advice. If you're active duty, your income has two major pieces: your base pay, which shows up on a W-2 and is taxable, and your allowances, housing and subsistence, whatever, which are non-taxable, subsistence, which are non-taxable reimbursement. That distinction matters because non-taxable income can be grossed up, which means we can count more of it toward qualifying. On a $2,000 housing allowance, you have $2,000 to put towards your mortgage, every dollar of it, because you're not losing a portion to taxes. For veterans who just transitioned out of service, income documentation can get more complicated. But that doesn't mean it's impossible. If your work experience in the military is related to your civilian career, even directly, that history counts. 2 years at the same employer, not required. 2 years of work or related work history in the same field, that's the goal. And if you've had gaps, taken time off to raise kids, dealt with a medical situation, gone back to school, there are ways to document and explain those gaps within the guidelines that many loan officers don't pursue. Now, building wealth with the VA loan, here's what I really want you to take away from today. The VA home loan isn't just about buying a house. Used correctly, it's a wealth building tool. There are guidelines that allow a veteran to convert a primary residence into a rental property and use that rental to offset expenses when buying the next home. There are guidelines around multi-unit properties that allow an active duty member to purchase a 2, 3, or 4-unit building, live in one unit, and use the rental income from the other units to help qualify. These are not loopholes. These are the guidelines written specifically to help veteran families build financial stability and generational wealth. But none of it works if the person sitting across the table from you doesn't know it exists. That's why I always say strategy beats rate. A slightly lower interest rate means very little if you're working with someone who doesn't know how to put the full picture of your situation together. What matters is the household, the whole financial picture, the cash flow, the long-term plan. Safety, liquidity, and return. That's the framework we use with every family we work with, and it applies just as much to a veteran buying their first home as it does to anyone else sitting at the kitchen table making one of the biggest financial decisions of their life. Bottom line, if you're a veteran, active duty service member, or you know someone who is, I want you to do two things before you talk to anyone about a home purchase or refinance. Go to rsrlinks.com/VA loan. That's rsrlinks.com/VA loan. There you'll find information about the VA benefit and how to start the process the right way so you walk into that conversation informed. Second, if you want to get your complete financial house in order, your budget, your credit, understanding you can truly afford and how a mortgage fits into your overall financial picture, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It'll walk you through what you need to have in place before you make your move. You earn this benefit. Let's make sure you use it with strategy, not with eligibility. I am Ron Siegel, certified liability advisor and certified veteran mortgage advisor, helping families build wealth through strategic debt management. Thanks for listening to our VA Home Loan Workshop, brought to you by rsrvaloans.com, rsrvaloans.com.